Well,
So,
I mean, what are
first,
they? I think we inquiring minds want to know. But don't leave us hanging.
the market obviously has been a lot stronger when you take a look at the broader market than the actual S&P, and the deterioration of technology is a particular concern, given that that's still the number one sector within the S&P. Tech has moved down to almost near two-year lows versus the S&P in equal-weighted terms. So that's really a difficult sector right now. And we've seen breaks of uptrends since October. Things have rolled over a little bit. So I also have concerns that volatility is starting to pick up a little bit, cross-asset volatility, whereas the implied vol is still quite cheap. So we see the VIX near 23. We look at the volatility in crypto and really these violent swings we're seeing in equities. I don't think that's healthy. Third is that we haven't really seen yields roll over yet, and that's really a key piece of the puzzle before we can expect a meaningful rebound. Bottom line, a lot of the cycles I study suggest the next couple of weeks we are still in a window of volatility. I don't want to say I've completely given up on the chance for markets to rally, but we need to get up above late October highs, which really means a move immediately above 39.11. And conversely, under 3,700 certainly opens things up to further volatility on the downside.
Why do you use the word immediately? I mean, what does that mean? Like, put it into, what is that, daily terms? Like, when does that have to happen? I mean, we have the CPI on Thursday. We're at 38.28. We need to get above 39.11 to confirm that we can continue to move higher. By when?
Yeah, there's two key parts to this puzzle. One is that we've had about a 3-day bounce in futures, and we're right near very key, sort of what I call downtrend line resistance. So we need to get above that. And the fact that we've rallied up here, if we stall now or start to turn down, that could be problematic. And the second, as you mentioned, we have CPI coming up on Thursday. So the market has attempted to stabilize, but yet we're still trending lower. And we have a lot of uncertainty, not only with regards to CPI, but even with regards to the election as to whether there'll be a clear-cut winner. And if there's any sort of indecision that drags on for a couple of weeks and or a poor CPI number, both of those could be a real negative. And so I have real issues with regards to technology in the short run. We need to see things stabilize right away. And a lot of my work, when I look at stocks like Microsoft or Alphabet, it's very, very difficult to put in a low just yet. And there's quite a few stocks that are still in poor shape.
The other one that I know you're focused quite heavily on is Tesla. Can we show what those shares are doing? Because you say that we're in the midst of what you consider to be a technical negative, that this stock, which is at 191, could go down to 165, if not barely above $100. That undoubtedly, I would imagine, is a negative for the market at large.
It's a big call. It's not based on fundamentals whatsoever, although we know that the takeover of Twitter that could cause some near-term issues with regards to having too many irons in the fire potentially. I'm looking specifically at the fact that Tesla is breaking down to the lowest level in nearly 17 months. So we're undercutting, what I call the neckline of almost a 2-year head and shoulders pattern. So these still tend to be quite effective, and a lot of my cycles that I study suggest that Tesla likely sells off specifically between late December and March to May. So I think the downside for me is 165 to be safe, and in an extreme case, it could hit 109. And so that, obviously big decline, much bigger than many people would think possible given recent trading history. But, the stock has been abnormally weak over the last couple months. Momentum certainly rolling over. Now we're seeing the price really confirm this recent breakdown. So this stock is certainly, in my view, something to be avoided in the short run.
All right. That would be a stunner, no doubt. I appreciate it, Mark. Thank you. That's Mark Newton, Fundstrat.